Oil daily forecast, March 28th, FXEmpire.com. The light sweet crude market, as you can see ahead of you, fell during the beginning parts of the Wednesday session, but found enough support at the 95.5 level in order to grind higher and test out the 97 level. It fell from there and has formed a bit of a neutral candle. But what we're more interested in is the fact that this neutral candle is right underneath a seriously messy area of noise. Because of this, we think it's only a matter of time before we see some type of sell off from up here in this level. So we think that perhaps buying on pullbacks may be the way to go. Whether or not you should short this market might be a completely different question because of the fact that there are so many things going on in Europe at the moment. Remember, headlines can work in both positive and negative spins. Granted, this is not the contract that most Europeans are tied to, but it certainly is sensitive to the overall macroeconomic situation around the world. Going forward, we think that this market is simply trying to find its spring range, perhaps even its summer range, and as a result, we are willing to play it as a short term market, but right now don't have any signals. Looking at the Brent market, you can see it's a very similar situation in the sense that we spent most of the day falling and then bounced in order to form a little bit of a hammer, and this does look supportive, but you can see 110 held the market back, and we believe that all the way up to 111 you will see a significant amount of resistance. Also, this market is highly tied to Europe, and as a result, we wouldn't want to be in it at this point. Going forward, we think that anything resistant between here and 111 is a sellable candle, and as a result, that's essentially what we're looking to do once it's all said and done. If we get above that 111 handle on a daily close, we'd have to admit that we're probably heading towards 113.50 and possibly even higher.